Good morning, good evening, good afternoon, wherever you are in the world. Thank you so much for tuning in to another episode of Market Check brought to you by BB. The title of today's stream is Crypto Green on Trump Crypto Town Hall Day. That's definitely a word salad, sandwich, word something. It's a mouthful. But yeah, guys, volatility incoming. There's a ton of news-driven headline risk that I think we're probably going to be seeing probably a lot of today, maybe even this weekend. But this market has been very, very difficult to navigate on basically every time frame because of that headline risk. I mean, even if you look at what happened last Sunday, everybody's just hanging out, comfy in their short positions, comfy in their hedges. And then we get a random truth post from Donald J. Trump basically saying that we're going to have a digital asset stockpile here, including altcoins, in the US. And then everything squeezes like, 10 to 40%. And then suddenly the next day we're like right back down at range low again. So it's a very difficult time to be trading actively with leverage. Spot, you kind of just have to stomach some of the volatility, especially the stuff that's really catalyzed just by short-term news blips. But yeah, we'll see what happens today. Truthfully, I don't even really know what to expect out of this crypto town hall or crypto conference or whatever it really is. I guess it's the first time we're seeing this, and we're going to learn more about it. But expect some headline risk later on today. But we are joined by Tucker, Louie, and also special guest Wabi. He's up nice and early for us today. Is that an Ethereum shirt, Wabi? What am I looking at?
It is, brother. Special guest. What are we talking about here, man? If you remember the summer of 2023, but it has been a while. What's up, guys?
Summer of 2023. Yeah, it's only March of 2025 now. So
Yeah.
Yep. You were basically just on the show again, Wabi, but happy to have you here, man. It's great to have you rocking the ETH shirt today. I can't believe you even own an ETH shirt. I'll be completely honest, but hey,
Yeah.
that's
Anytime I've worn this shirt, price action is not that great. Last time I wore this was August of 2022, and that was pretty much like near the local top, right before Caroline Ellison took over FTX. But happy to be here with you guys. And yeah, ready to talk markets, man. Unfortunately, I'm not bullish at the slightest. I'm really not, man. But I'm just here to accompany you guys. I know Tommy's out of action, so I thought, hey, I might as well, try to come in at least on Friday or something like that. So, what's going on, guys? Happy to be here. And
I know you want to look at the MAs, Bobby. I know you're a big MA guy.
Yeah. I mean, I can share my screen, but I mean, you're pulling it up right there. Yeah, BTC is curling below all the daily EMAs, below the yearly open, SPX below the yearly open, NASDAQ below yearly open. Altcoins, weekly EMAs are all curling downwards. Bitcoin is in a completely different asset class of its own. So when people say, oh, Bitcoin's only at 85K, 90K, why so bearish? It's because your altcoins don't really have any bid right now. And there's really no inherent reason to like buy SOL right now if DEX volume, if pump fund volume is down. ETH on chain is completely dead. It's a graveyard. But I do think we have some sort of bounce in Q2 at least, right? But as we saw in 2018 and 2022, when you think it's supposed to bounce, it's not really there, right? So, I mean, personally, the only thing that I'm actually willing to bid if prices go to a certain level is probably Hyperliquid. If I get that at like $10, $11, that's the only thing that I'm really interested in purchasing, honestly. And Ethereum has a double top on the weekly. Usually whenever you have some sort of pattern like that, you usually go back to like the point of origin from that pump, which is at like 1600, 1700. If things get disastrous in equities, say like the NASDAQ goes to like 13,000, 15,000. I don't know, ETH going to 1,300, 1,400 wouldn't surprise me, but I don't really like shorting crypto. I think the only times that I've actively shorted crypto was in April of 22 and June of 22. That's pretty much
Bobby,
it.
let me ask you about your bearish bias, brother.
Oh goodness!
Here we go.
All right, let me ask you this: Are you okay? Because here's the thing: is with traders and investors, it really all comes down to time frame, right?
Yeah.
So, are you saying, you know what, for the remainder of Q1, I'm bearish, or are you saying this cycle is cooked? I think we're in a full-blown bear market because there's a big difference.
Yeah. So I'll put it to you like this, right? If we look at the way Q4 and early Q1 panned out, we had Pepe. I've even said this on Spaces so many times with Donnie. When you have something like a Pepe or a WIF get listed on Robinhood, and Pepe went over 10 bill, right? WIF went to like 6 bill. We had Trump coin, right? The president of the US released the Memecoin. So with that, I consider it the same sort of events as the Coinbase IPO going live. Pepe literally went to like 13, 14 bill, 12 bill, got listed on Robinhood. I consider that like an IPO of meme coins if you want to kind of compare events. Moonshot went to like the number one app on the Apple Store. So you had like crypto growth, right? Similar to Celsius and stuff like that. You had a retail driven app that made it to the top of the App Store. So that's 2. And then you had a meme coin driven by an influential figure, which is Trump. And I understand, last cycle this, last cycle that. But if we really, want to remain true to that, we've hit so many metrics that have blown last cycle out of the water, including a president launching a meme coin and DEXs like Jupiter, Meteora, everything on Solana making hundreds of millions month over month on revenue, right? And I mean, meme coins going to like over 5 bill is pretty euphoric, right? And when you have that under a tightening regime, I think we've hit a good peak for a few amount of months, right? When Coinbase IPO'd, it took the market like 3 months to bottom out. So, and if you can consider the peak January, sometime in Q2, we probably have a pump, right? Sometime in Q2, but you have what's his name? The guy in the treasury, Bassett. I sent it to Tucker. He's pretty much going on CNN, CNBC, and all these other news stations telling you directly like what this administration is going to do, right? Scott Bassett on CNBC, he said this, I think earlier today. He said the market and the economy have become hooked, become addicted to excessive government spending, and there's going to be a detox period. So if you have Trump doing all this tariff war stuff as he did in 2018, when you have government reducing spending, you have a bunch of people that are going to be laid off, and you have this administration more so focusing on like the little guy who's not as asset heavy. They're telling you there's going to be a cool off period in markets, and with crypto being so attention driven, and most of the attention being in altcoins, which is what we mostly trade here, and altcoins have incoming supply, massive dilution, and no notional buyer. What does that mean, right? Lower prices. So, yeah, that's kind of.
So you're bearish?
Extremely. But I have been for weeks and weeks. Like I have been for some time.
I know.
Time. Yeah.
I'm just messing with you.
But I'll admit that I was wrong, right? I was wrong. I thought like when Trump coin came out, that same day on Spaces, I'm like, yo, this could be Doge for the market, where Doge went up like, what was it, 10x? If you go to the Doge chart and you pull up like late January of 2021, Doge pulled out a 10x, and then it pulled back like 45%, while other alts like Luna, Solana, all that stuff went crazy, right? That wasn't really the case. What you had was everybody and their mother holding on-chain bags going into Trump all at once, kind of one final hoorah. Regardless if BlackRock is buying Houdini coin or Zimbabwe coin, or they're buying a bunch of stuff for World Liberty Fi, the market has clearly shown that was a good top, right? And I think once that Venezuelan guy, the president, released the token, that was like the final straw, along with Kanye talking about crypto. Like that was it. That was pretty much it. And since then, prices across the board on altcoins are down like 70%, 65%. And I remember throughout December, if you weren't in AI, you didn't really do much. The entire market topped between mid-November and early December, and we've practically been bearish since then. And it's a clean downtrend too across like all majors, right? With the exception of Sol and BTC, which put in, you know, slightly marginal highs. But like my invalidation would be, first off, BTC reclaiming the yearly open, right? SPX right now is also at the 200-day moving average, and you know, wouldn't really rule out some sort of bounce over the weekend if, I don't know, we get some crazy nuke after the crypto summit, because good news is now bad for price action. Bad news is now bad for price action. Like, I don't know, you got to respect the trend and wait for things to settle, right? You can't try to be a hero. At least I'm not trying to do so. And I just remember being a part of that 2018 bear market pretty actively, and it's the same sort of price action. In January 2018, everybody was catching alts on KuCoin. Everybody in January of this year were catching derivatives of Trump coin. And then in February, you had a little bounce, right? Which we did after that early Feb capitulation. And people, what was the narrative back then? Institutions are coming. Institutions are coming. Institutions are coming, right? The Winklevoss twins, the head of American Exchange, they're launching an ETF. There's going to be this exchange called Backed, and they're going to be selling BTC to TradFi. And prices just went down. The overall time frame is down. So outside of BTC, I can't really find any bullish hopium. I really can't. Maybe it's a bottom, but I've had this stance for a good while. Like, who is buying ETH right now? Who is buying Sol? Outside of like trading. Liberty Fi was buying the top in December. They were buying.
Yeah, I know, but there's still.
No, that wasn't a top.
That was a top. Look at ENA. Look at Say. Look at Arkham. WorldCoin.
Yeah, okay, those are minor buys. Their bigger buys were in ETH, and we're only down maybe 10-15% from those buys.
Oh no, man! ETH is down like 45% since like January. Since the yearly open, I think ETH is down like 40%, 35%. Since December, it's down like almost 50%. Like, they are down bad. But I mean, hey man, I'm open to hearing what you guys have to say. I don't want to take over. I tend to ramble and rant. But yeah, I'm basically flat right now. The only thing that I've been trading here and there have been new tickers like Bera and IP, and those are centralized exchange tokens. They're not really like on-chain stuff at all, which is where I mainly thrive. And I'm assuming most people that are tuning into this or that tune into our spaces, they've mostly participated in the on-chain markets. And again, right, like, I pay attention to metrics. DEX volume down well over 90%. Pump fund, well, down over 90%. Moonshot volume down over 90%. So until those active flows start to trickle back up, we're just in a risk off period. And sure, like, you can catch some bounces here and there, but I really don't know what else to say, man. And I could be wrong, bro. I could be wrong. I don't mind buying higher. I really don't. And I thought Trump, he was going to come in and rage pump markets, but the moment he started talking about tariffs and all that stuff, you kind of have to lean into that. And if you guys see his body language when he signed that crypto executive order, like, you can tell he does not really care. And he flat out said, oh, I promise this, right? We're going to do this, right? When David Sachs gave him the spiel, which is basically saying he's not going to cheat the BTC from Silk Road or any BTC that's seized from a criminal entity, right? And it's just the plan to buy digital assets, right? So I'll say this. I think it's a similar announcement and a similar event to June of 2023 when BlackRock filed for those ETFs, and it took about 8 months for those flows to kick in, right? 8 months for prices to truly go up, 6 to 8 months. So I think, the Fed could potentially end QT by Q3. and that Q3 dump that we usually have late July, early August, I think at that point, Fed ending QT, government starts adding BTC to their balance sheet. At that point, I think it's full bull, and you actually have a rally with altcoins against Bitcoin. If you pull up others against BTC, the last time we had a meaningful rally on that pair was in Q4 of 23 going into Q1. And I mean, you'll remember, dude, you'll remember in Q4 of 23, we had Say, Sui, Tia, Injective, Caspa, meme coins.
All right, Wobby. But it doesn't make sense for me to get bearish on this pair here, right? Like if you weren't bearish on the thing up here, why would you know what I'm saying?
But altcoins are showing you that, bro. They were down 70%, 60% last month. Now they're done another 50%. Like altcoins are increasingly dilutive. There's always incoming supply adding to the market cap, but we're all trading the same thing. We all trade Pepe, Mog, AI stuff on Sol, and sometimes we go on base and play derivative plays and stuff on Sui, right? Like there was a shitter that came out on Sol that went to like 50 mil, right? Because Grok tweeted out some stuff. Those launches happen almost every other day, right? So the market cap that you see on others is excessively just diluting itself over and over and over again. But the main tickers that people pay attention to, right, the things with the most volume, they're consistently bleeding against the majors, specifically BTC, right? Like most things that pumped in Q4, right, that were like tickers that trended in Q1 and Q2, they just put a lower high against Bitcoin. And a lot of those alts probably not going to come back, especially if you think to yourself how much money was extracted from the market after all these horrible launches, right? A lot of money got extracted and destroyed, and now people are getting destroyed on leverage, right? So
yeah,
I think now
everyone's trying to make it all back on leverage, and they're just getting washed. That's true. The amount of liquidations we've seen is just like Jesus. Like just imagine, like I tweeted this too, like all the money that people just dump into leverage that just gets immediately wiped. Like just imagine if these market participants were just actively buying spot. Like think of what of a different market we'd have if like not everyone was chasing like the high leverage greedy mindset. Like I feel like we'd be in a way better spot. But yeah, that's totally true. Like you could definitely tell people are trying to make it back, make everything back on leverage, and it's just not working out for them.
Yeah, and I'll just say one more thing because I feel like I've spoken way too much since the stream was started, and I know like you guys have stuff to say too, but Solana so far since the low, and like I mean we've been covering Sol since like $12-13, man. We have a video on our YouTube that has like barely 1,000 views. Me and Max made it. We were comparing Sol to ETH last cycle. Like Sol at that point had one of two options. Either it was gonna just be Neo from the 2017 cycle, where Neo just made a complacency high against its old all-time high, right? Like a massive echo bubble, or it was the easiest trade of the cycle when it came to majors, and it's perhaps more in tune with Ethereum in the 2020-2021 cycle, right? And during every single major key bottom during this cycle so far, so I'm talking like the low in like late December when the NASDAQ went to like 10.5K, right? I'm talking the low when SVB went to 0 and BTC went back to 19K. I'm talking that mid-June dump in 23. I'm talking the blowout that we had in August, the higher low we set in September of 23. And then, every other major local bottom after that, Sol has been the one to lead off of those lows. And when you have such a strong indicator for the broader alt market, I'm talking memes, I'm talking AI, I'm talking fundamentals, lose its trend. That's something to pay attention to, right? And in Q3 of last year, we saw Sui lead the charge, and Sui has completely broken trend. So when you have leading altcoins, right, that have overtaken what Ethereum used to be, it's something to pay attention to. And at this point now, we're at this stage of the cycle where we're so reliant on macro, where we just have to be patient. I understand DXY is rolling over. S&P is at the 200 daily moving average and all that stuff. So, you know, there's a lot of, like, we're unironically at a pretty important level, to be honest, right? But if Bitcoin so much as like, if Bitcoin so much as like double bottoms or even makes a little deviation below its current low, altcoins are going to absolutely shit the bed. Because if Sol loses this level specifically, it fills the wick at 102. And
was that you, Louis?
Yeah. Hey man, hey, I'm look, I'm willing to have an interesting debate, honestly.
No, of course.
Willing. Yeah, no. I'm willing.
Yeah. So the only argument, no, everything you just said was, you made great points, right? Honestly, I was like, oh shit, you know, these are some valid points here, you know, and it's good to have these discussions. The only thing that I'm looking at, well, there's a couple things, but ETH right now and altcoins are pretty much like at the same price that they were back in the beginning of February, where we made that big capitulation low. Like ETH right now is
not on chain alts, brother. Not on chain alts.
Okay, those are going to be the first. Those are going to continue to bleed because those shouldn't have been as inflated as they were to begin with. And that also comes back to where I think we're coming back full circle as far as people are done gambling and speculating on those. And I'm sure there will be a time down the line where money flows back into that sector when if things get frothy again. But I think a lot of people are just done gambling on those things. I think that people have been burned enough times to realize that it's kind of a crapshoot, right? And I think there's a time and place for that to come back if it does. And it's in a way different environment like that. If we do start to see market reversal across the board, I feel like that's the last, like, except a select few of the stronger performing, you know, on-chain meme coins. I think those are the last things that are going to move if we do see a market reversal, right? So I don't really take that as signal, in my opinion. Another thing, like I was just saying, ETH is sitting at the same price it was in the first week of February. We had the big wick low capitulation, right? We bounced up a little bit. Bitcoin lost its market structure, dropped 15 to 20%. And ETH is still sitting at the exact same price it was a month ago, right? Same thing with altcoins. Altcoins, at least the stronger altcoins, right? Or not the on-chain shitters that are 1 to 5 mil market cap. These are larger projects, top 100, top 200, whatever you want to call it. They're literally at the same price, at higher lows or higher, or slightly below where we were in the month of February, beginning of the month of February. So that tells me, that the slowing, like the momentum to the downside is slowing. It's not expanding, right? And again, that goes back to what I was saying. I really think we already seen this massive capitulation in ETH and altcoins. Like it already kind of happened. Sure, there's always a chance we can go a little lower. But I think the majority of the move or the meat of the move has already happened. And when you, just like what I said, if you're looking at the beginning of February and now, like everything we've seen, S&P's down 8% off its highs, NASDAQ cascading down, Bitcoin lost market structure, dropped 20%. All within that span of time, ETH and altcoins are kind of sitting at the same price. They haven't continued lower. So that's a bullish signal to me, right? Unless they're all going to fall off a cliff out of nowhere after seeing all this happen for 4 weeks, right? Which is a possibility, right? I don't have a crystal ball, but the fact that we're sitting at or near the same prices when all of this market-wide carnage has gone on, and they're not budging, tells me that there's not many sellers left, at least in the important, like, or the bigger, or the like the real cryptos, if you want to call it, right? So that's something that I'm taking as signal. So what do you think about that?
Well, what alts are you talking about? Because Hype made new year-to-date lows yesterday.
Okay. So Hype's a relatively new token. All right. So all right. So you got XRP still sitting well above where it was. Well, not in February, but still, you know, if you bought earlier, you know, end of last year, you're up 4x. ETH sitting at the same price it was at the capitulation lows back in February. Pepe sitting at the same, literally maybe 5% off the lows that we made in February. Andy sitting at literally the same price we were in the beginning of February. You know, that's just to name a few. You know, I don't want to keep going down the list, right? Some have made more lows, right? Some have continued selling, but a lot of them, you know, a lot of these tokens are kind of sitting at or near where we were in the beginning of February, right? That tells me the big move in alts and ETH has already happened, right? So that's kind of how I'm looking at it.
Pepe actually made new lows on the 6th. And if you look at the
like I said, it's slightly lower, right? Slightly lower, but it's within like a 5-6% range.
Oh no, dude! Like the low that we hit for Pepe in early February was 3.8 bill. We're under 3 bill now. Same thing with Sui. Same thing with, I mean, XRP, right? That is a major. It's top 3. ETH is at the same price that it was 4 years ago.
Here's the thing with Pepe though, man, is like, for one, I think that the Coinbase listing pump on this chart in particular makes it look way worse than it is. Now, the chart is the chart, right? But we can all agree that like the Coinbase listing pumped it up probably 50%, that little 50% bleep right there. Obviously, if Coinbase, you know, the Coinbase listing hadn't happened, it wouldn't look like that. Pepe hasn't really done much since like March, right? Like it's really just been in this giant range if you exclude that Coinbase listing. And also, I think it's pertinent to recognize with something like Pepe, the fact that, yeah, it may be back down at its August range low, like from that August 5th nuke, but at its core, Pepe is literally just on-chain leveraged ETH. That's how it trades. So when you put it in the proper context and the setting of saying, well, look, yeah, it's down bad, but it's trading exactly how you'd expect it to trade, which is just as sort of a proxy to bid ETH on chain in a very liquid beta format, right? So ETH is back down at that same August level or even lower. And so is Pepe, right? So it's not like I don't look at Pepe and say something is systemically wrong with Pepe. I just think it's a product of these L1s, right? So I mean, the big question is like, can ETH bounce? If ETH can't bounce, then Pepe is not going to bounce, right? If ETH does bounce, then Pepe is going to bounce. But it doesn't seem like you think Pepe's or ETH is going to bounce, right?
Oh man, the show has turned to like everyone against Wabi, but
no, we're just having a discussion.
Yeah. I mean,
who's against Wabi?
I kind of think about it like this, right? Like, if you're bullish on people going on chain, Sol has been that barometer, right? Like Sol has been that prime indicator of new retail inflows coming in. It's been the chain that's added the most stable coins over the last 18 months. And if you're bullish on DeFi, ETH is signal for that, right? So far this cycle, most of the flows that have gone on to ETH have been to buy a handful of meme coins and to play on base, right? Not so much base, right? But you know, ETH hasn't really had that narrative where people are incentivized to borrow against it, right? Where it creates a supply shock. 2017, ETH went up like crazy because you were incentivized to buy ETH in order to participate in ICOs, right? You'd buy like 10 ETH, send it to an address, and you'd get your respective token back, and it would do like 100x. And all tokens were completely unlocked on day one. And then in 2020, 2021, you were incentivized to buy ETH and pair that up with USDC, put it in a liquidity pool, and farm a shitcoin, right? And that would exceed like thousands of % of APY. And you don't really have that this cycle. You have more of a inflationary.
That's it.
Yeah, you have like an inflationary aspect to ETH this cycle with proof of stake, right? So as much as BlackRock and that narrative has been running, right? Like, oh, ETFs are live.
But do you really think the problem with ETH is that it's slightly inflationary? Because Bitcoin also is slightly inflationary. Doge is slightly inflationary. Like there's been like slightly inflationary tokens every cycle. It's not like ETH's got an inflation rate of 100% or something like that.
Yeah. So with ETH, like, there's some sort of burn mechanism on ETH, and that goes into effect whenever people are using the network a lot. And what you end up having is anytime ETH gets into this higher time frame level, like 3,800, 3,900, 4,000, you have a lot of OG miners back when ETH was proof of work dump on the market, or the ETH Foundation was selling on the market, right? And you just can't have that happen. And I think ETH probably goes up when QT ends. I think Cowan is right. And like, just to make things clear, I've been pretty bearish on ETH since like 36, 3,700. At that point in the market, like nothing was moving outside of AI. And whenever you have the market have a collective decision in agreement to bid the same pair of tickers, the market ends up topping out, right? So when everybody was agreeing that AI 16Z was going to go to 10 bill when it was trading at 1 to 2, same thing with Cerebro, right? Like Cerebro went from 50 mil all the way to like 900 mil. And everyone was like, all right, Cerebro to billions. And I was in that camp. But again, once you started seeing momentum die off and everyone collectively agreeing with that stuff and Trump coin releasing his token, you just kind of have to give into the market and say, hey, I didn't expect this. This is essentially like Elon going into SNL and shilling Doge. And the thing with being a vocal bear is that like it, like I think you mentioned this, Max. I'm not sure if it was a call or a market check stream. Whenever you become a bear, you have to be really careful on how much you give into that narrative, because people join crypto because of NGU, number go up, right? But you know, whenever you have flows kind of die off and people aren't willing to bid and you give your analysis, people actively like get angry at you, right? You kind of have to like separate yourself from the noise that you see on Twitter, right? You kind of want to be here for the long game, not so much for like, you know, just one cycle. You want to be long enough to see Coinbase hit $1 trillion in market cap, Hood hit $1 trillion on market cap, right? So that
would be awesome.
Say what?
That would be awesome.
Yeah, like we all know that Bitcoin is going to like $1 million, $2 million, right? Fed's going to print money at some point. It's just with altcoins, right? I think the difference is like, are you actively going to have the same flows to these altcoins as you have with Bitcoin, right? Like TradFi is now starting to accept BTC as a reserve asset, right? And it's taken Bitcoin like 16 years, 17 years, right? Since its inception. Whether it's ETH and all that stuff, right? There's always some sort of voting mechanism to change its framework. You always have like incoming supply from VCs with some of these altcoins. And you have to ask yourself, like, is it really worth going that far out into the risk curve when Bitcoin's a sure bet? When it comes to TradFi money, right? Like ETH, I think the good thing that ETH is in, if you want to talk fundamentals, is number one, MetaMask is the safest wallet. It's the top wallet in the entire industry, I think. And if I were to hold stables, it would probably be on ETH mainnet. So it's a bank, right? ETH has fulfilled that one narrative where it's a bank of sorts, right? Stablecoins. It's fulfilled that role. But what we've seen historically is that ETH really is only fruitful when growth is doing phenomenal, right? When Cathie Wood is making money, ETH is going to gigaprint. DeFi is going to go absolutely crazy, right? And Cathie isn't really printing money right now, right? She just hasn't for a while. So you need a narrative for people to be incentivized to use their ETH for either DeFi or some other sort of event that causes a supply crunch, right? Like last cycle, people like exchanges actively had an ETH supply crunch, right? Because they were buying all this ETH during DeFi summer to participate in these food farms. And then in 2021 with, you know, even more APY crazy stuff. And you just don't have that right now. And
I would argue that price going up brings those narratives back to the table, right? If price isn't going up, I don't think there's going to be any narrative.
I hope so, man. I hope ETH BTC at some point actually starts going up. I think Ben Cowan is right. This time, I think he's right. And I think a lot of people are going to lose their shirts continuing.
Yeah, what's he calling for?
I think he's calling for like 1,400, 1,300. He's just calling for another spike down, honestly. But I'm more so focused on like hype and SOL, to be honest. I think they outperform during this next leg up whenever we get it. I just can't be bothered with trying to catch a bottom right now while Trump is actively messing with the market. And if you go on leverage, you're probably going to be stopped out if you leave the desk. And I really just don't want to do that right now. And I think we're in the phase of like those last few holders of certain alts just like screaming into the void, being angry until you have one more wipeout at some point and that toxicity leaves a space and you actually have active accumulation. But if you go on the daily time frame since December, practically everything is in a downtrend. Every single asset is in a downtrend. Every single one. So I just want to see accumulation, honestly, and I'm being open about that. But I want to let Tucker cook for a bit because I genuinely feel as if I've been yapping way too much, man.
You've been yapping, brother. You have been
yapping. Yeah.
Oh man. Well, Max, I don't think you've said a word quite yet either. So, are you convinced?
Max has been selling everything.
No. No, I'm working on this. I'm listening to Wabi. I like hearing what Wabi has to say.
Yes, me too.
And he's not wrong, right? And these are not opinions that like we haven't heard because Jackus and Tommy have, you know, they've been sharing similar thoughts as well, right? So we've kind of got this like here's the thing, Wabi is like correct in saying like all this stuff is in like, you know, these daily time frame, 12-hour time frame, weekly time frame downtrends. You know, it's just my question is like, okay, so yeah, like you look at this thing and like it's in a downtrend, right? My big question is like, can you really expect at this point ETH to basically just like drop to $900 or $1,000? There's a lot of people out there that are saying like it's just going to go to $900 or $1,000 and like it's over, you know? And I feel like that type of pullback doesn't signal, yeah, we're in a correction. It signals, yeah, like the cycle's completely over. Like, yeah, there's always something to be salvaged, but at that point, you completely redefine what like a crypto cycle looks like, which of course every cycle has its own little, you know, nuances and things like that. But kind of TA 101 says that like we can't really go that low and still be okay. Then you're talking about re-entering, you know, a multi-year bear market reaccumulation. And we're talking about some major problems, right? Unless you're talking about like a COVID style flash crash, right? So those are just kind of my initial thoughts where I'm like, yeah, all this is making sense. Like Wabi's not wrong to say what he's saying at all. But it's tough for me to grapple with this idea that like ETH is somehow going to go to $900 or $1,000 and still be okay. Because I don't know if it would be at that point.
Not for multiple months at a minimum.
Yeah, not one bit. I mean, you got to think about like the ability that liquidity has to recover from such an event and people's willingness to bid after an absolute nuke in the markets. And I was talking to somebody about this yesterday, but the space is becoming so much more educated that I would go out on a limb to say probably 8 out of 10, you know, retail participants chart now. And with that being said, the majority of people looking at charts, if the chart is not painting a bullish price action, and people who even have the, you know, the slightest of inkling on how to do TA, if they look at a chart and the majority of, you know, the sector looks at a chart and it does not look bullish, I think that you have a very tough time to see follow through from a bullish constructive price action. That's why I think Pepe has the potential to do absolute numbers if we do get a leg up here very soon, because it is one of the only alts that on a high time frame basis still looks decent. Like the majority of charts on alts specifically look wrecked across the board. And when you have the majority of retail participants charting and looking at charts, using it to analyze and create theses, then who is going to be bidding those charts that don't look good constructively? You know, and then we get into some of the RWAs, like somebody just mentioned, XRP looks fantastic. So a lot of the charts, I think how a chart looks matters more now than it even did in the past, arguably, because a lot of our liquidity flows are dictated based off of what we are visualizing and what the chart is showing us. So I was just kind of thinking about that the other day. And if you get a flush, man, like we are at the like do or die levels on a lot of charts. Like it is put up or shut up time, in my opinion, on charts across the board. And not only crypto, I mean, you're talking NVIDIA, ES, yields, Dixie, everything across the board. It's like, it's huge key inflection points. And I can't remember, another time to where we had so much confluence across the board between every single sector being at almost arguably every single chart being at arguably the most important inflection point on every single one of them. And so I just like, I don't know how, I can't really be in the camp. Like if we flush people that are calling for 1500 on ETH, 1500 on ETH from a structural perspective, like I just genuinely don't see how it recovers from there.
That's kind of where I struggle is, I mean, look, here's the thing is like, if you look at like the COVID fractal, it's like, yeah, you couldn't go down there either, but you did. And then, you got the perfect fundamental catalyst being QE and ZERP to send it back higher. So like something like that can happen. I just think it just becomes a really dangerous game, right? And you certainly don't expect something like that right in the smack dab middle of a cycle, especially when Bitcoin, is like still in the mid 80s, so it's just an awkward spot is what it is for me. But I agree with you, Prometheus.
Hey guys, can I ask you a question, a genuine question? So I assume most of us were trading Pepe in April and May of 2023, right? Shout out to Tommy. He called that out at like 300K market cap. If someone told you during that time frame, right, that in 18 months Pepe would be trading at 13 bill market cap, 12 bill market cap, Robinhood would list it, you'd have Bitcoin trading at 110,000, Solana at 300, SPX would be at like 6,100, NASDAQ would be at like 22K, and the president of the United States is now Donald Trump, and he's going to release a meme coin that flips Doge. If anybody told you that, right, would you say that it was the top?
Well, Trump's meme coin didn't flip Doge, bro. That's not true.
It went to $77. That's like 70 bill market cap.
I know, but that was like the FDV or whatever.
No,
like the
it didn't hit 70 bill.
Yeah, it went to like top 12.
So if you remove the 80% of the supply, that was before it was being properly calculated. If you remove the 80% of the supply that was like locked away, it wasn't even close.
Right? It went to 15.
I mean, dude, that's a pretty huge FDV. Regardless, like that's what we're all trading against, right? Incoming supply and all that stuff. But regardless, like if you add all that up, right, and someone were to also tell you DEXs on Sol are making hundreds of millions of dollars a month in profit, you'd have one of the largest airdrops occur, Hyperliquid, right, where it minted millionaires just for people doing like 5-fig volume, 6-fig volume on its exchange. And you'd have multiple meme coins trading in the billions. Would you honestly say that that was the top, right? Like, would you sell? Would you sell? If everybody told you every single thing that would happen in advance, and you would also have growth startups, right? Like Moonshot, consumer apps that go from 0 to almost $1 billion, and then they get bought out by big crypto VCs, right? Which is what happened to Moonshot, right? They went from like top 300 to the top app on the Apple App Store, the iOS store, and flipped Coinbase. Would you? I
would ask where's ETH at? And if you said still in its multi-year range, I'd say then no, we're probably not topped yet. Because ETH is still a leading indicator for altcoins, in my opinion, until it's not.
But Wabi, from that same perspective, I mean, I get where you're coming from, but this cycle inherently is different in the perspective from the previous cycle, where using that as confluence for, topping for a top, right, you would have to assume what are the, driving factors and how is like what liquidity is driving the markets, where last cycle we saw retail liquidity driving the markets, where this cycle we're not seeing that. So why would a retail, application be confluent with an institutional top or cycle top that's been driven by institutional flows?
I mean, that's what's happened with alts, right? Who's bidding our alts? Retail money, right? They work a 9 to 5 for a couple of months. They use that saved money to go on the trenches, and it's the same notional buyer, right? You don't have a 3AC, you don't have a Silicon Valley bank or a Silvergate bank supporting those TradFi flows where they can buy the dip overnight, right? Last cycle and the cycle before, you would have these patterns on altcoins, right, where they would dip 40% and they would go back to all-time highs within a week. And you don't really have that right now. What you've been seeing is a couple of weeks of up only, followed by a couple of months of bear chop, right? And this cycle has been proven that it is, in fact, different, right? It's been 11 months since the halving, and majors are down quite a ton, right? Like I'm not actively short anything. I want to make that clear. I'm not actively short anything. I don't think we're going to go into a multi-year bear market. And as a matter of fact, I think like most of the downside is going to be done a lot quicker than people anticipated. And most people, again, are trading like on-chain vaporware, right? That cyclically rotates quarter after quarter. But I think Q4 is going to be good, man. Whenever the Fed ends QT, just for now, I feel like people are just angry. Like I unironically think that we're in anger right now. The Wall Street cheat sheet for a lot of on-chain alts. And the fact is like, I'm just not sure how things can look bullish last month or now when things are still in a downtrend, right? Like things can be down 70% and down another 50%, right? And the thing with knife catching altcoins, right, is that your specific altcoin might not actually make a marginal higher high. In 2022, I thought to myself, all right, we're full bear after the Ukraine war went full scale in February of 2022. CPI was going nuts at that point. Everyone admitted to themselves, all right, we're bearish after alts were down tremendously, right? And I thought to myself, all right, I know my plan. I'm just going to buy Luna when it trades at $5, $4, and that's it. It ended up going to zero. Bear market before that, I thought to myself, I'll just buy EOS under $1 or NEO or OneChain or ICX. None of those actually made an all-time high next cycle, right? So you have to be careful which alts you pick. But I mean, I think Pepe makes an all-time high at some point, not just like as crazy as people think, right? Just again, given the attention dilution that this market has suffered from for some time. And I remember saying this back in January, if you remember, Max, when I was saying, all right, TIA's probably cooked. It's had an FDV of 30 bill. I think most of the move is done. There's too much altcoins that are going to be releasing this cycle, too much attention dilution. And since then, if you haven't rotated like crazy, you've been bleeding against the broader market, with the exception of a few tickers, right? With the exception of a few tickers. Yeah.
Bobby, I mean, I'm in the same space, similar mindset, frame of mind as you. We've talked about it before. I was calling for an expansion of the volatility, and I was calling for a repricing or a pullback in the S&P. And, we've talked about it on spaces before, but the incentivization piece is the most key part for an alt season. I absolutely agree. And I'm not going to sit here and try to guess what that incentivization might be moving forward, but I do believe we are rotating and shifting into a regime, because Trump is a populist, that he is going to incentivize the space, and he's going to, and what we've already seen, incentivize companies that are American based. And it's kind of come full circle where we've almost gone from, last cycle of an entirely utility based with 2 or 3 meme coins to entirely meme based and more culture coin based and almost no utility. except for, you know, you could maybe say TIA and some of the fewer, you know, airdrop tickers of late 23. But I think now we almost shift back towards that, you know, how does this bring value? And I hate to say it, but it's true. And it's like a yin and a yang, and the market will find balance eventually. But just like XRP, you know, went through a bear market for 4 years, arguably 3-4 years, with it being repressed by the SEC. It still, because it holds so much value and has so much potential use case, that we eventually saw it pump, and you're seeing it do extremely well. Where I think the same will be said for the best meme coins and the best culture coins from an adoption standpoint and from a collectability standpoint over the next 4 or 5 years, just like XRP had, where the meme coins won't necessarily be repressed like XRP was, but people still believed in XRP to the fundamental use case, where people will still believe in meme coins from a cultural and collectability like standpoint.
I mean, most meme coins are not going to recover, but when you talk about something like Pepe, I think it's got a really good chance of recovering just because of how it trades, like with ETH and the broader market. But I see Louis looking at the S&P right here, right? We were talking this morning in our Discord call. I wanted to see that 5660, 5670 level get hit. And I do think, like, if you look at the daily time frame, Louis, like, keep this chart up, just move to the daily. Daily RSI is coming into a region in which I would expect some level of like an oscillation technical bounce at a minimum.
Yeah.
I don't know what that brings about, right? But if you look at levels like momentum oscillation levels, like just looking at RSI here, I would expect at least some sort of bounce. It doesn't have to be from exactly here, but somewhere right around here. That would at least send the RSI up to like 50 to 60. And then we reassess from there and go, okay, did we bounce into a shoulder and roll lower into Louis' green box? Or do we end up just like getting some good news and we end up like rocketing higher from there, right? We'll see, right? But I'm not expecting the S&P to just like straight up rug pull here. It takes a while for something like this to roll over, if it's going to roll over, right? So I don't know. I'm just saying, like, we're kind of coming into some of these technical levels, S&P, altcoins, Bitcoin, where I could expect like some local relief here, even if it's short-lived and just a technically induced bounce, right?
Max, let me ask you a question, brother. I'm not sure if people have seen this side of you, right? But if like, hey, look, I want today's market check, because I tune into market check. I listen to the replays and all that stuff.
Yeah, you don't tune in, you watch the replay.
I do. I do. Look, I am in my sophisticated gentleman arc, all right? and Max will tell you, as a premium KOL, he'll tell you, if the most bullish news comes out, if Trump says, I'm going to buy 1 million ETH tokens, like actual, like 1 million ETH tokens, adding in 9 figures of straight swap in one clip, it's bearish. It's absolutely bearish. It's the most
confirm that that's true. Yes. The most bullish thing you can think of will nuke the market. That's a guarantee. And Wabi, I actually find the term KOL very offensive. I actually identify as a niche internet micro celebrity. So,
man, if you remember that arc during ETH Denver of 2024, that, in my opinion, was the highlight of this bull market. Q1 of 2024, Q4 of 2023, when the boys were in Kansas City, that is probably like the highlight of this bull market for me. And I think, honestly, guys, like, I don't want to be a perma bear. I am a bull at heart. We're all bulls at heart. People make more money to the long side. And I just think that this Trump trade is a multi-year thing. And if we want to compare cycles, guys, what do you think of this, right? This is dubious speculation. What if Trump honestly just wants to bring down the market, to bring down housing, and make his midterm year right, next year during midterms, which historically is not really a good year for asset prices over the last decade or so, a bullish year, right? Kind of like nobody really expected the halving year to be crazy, right? Honestly, like in like Q4 of 23, I didn't think we would break the all-time high until Q4 of 2024. And what happened? In Q4 of 2024, we went well past 100,000 and meme coins went crazy, right? So I think like it's probably next year, right? The midterm year where markets are going to go absolutely crazy. I know Tommy in one episode, it was like one of the first market checks. He was speculating that he thinks the S&P is actually going to end the year in the red, but crypto just might end the year kind of like in a flatline state with a lot of volatility in between. So I just think people need to be more patient with the Trump trade. They really, really, really do. It's a lot better if we just have like this year be stagnant for growth in asset prices and then have those next 3 years kind of be like a perpetual up only kind of thing, right? Specifically for growth, given that growth, right, things like the IWM and all that stuff haven't made any big progress in like 4 years. Kathy Wood needs to make money is what I'm saying. Mm-hmm. And I think that happens once Trump pumps us out of a bottom, right? Like I think unironically Trump wants to induce some sort of downturn to blame the Biden administration and then create his own economy out of that and pump the shit out of growth specifically, right? Growth stocks haven't
hold on. So
go ahead.
Average dad in the comments was saying that this S&P structure top, I need a refute argument here, looks like 2021. I see it. But that would also just kind of imply that you're like probably here and you get a huge bounce. And that's kind of what Jackus was talking about the other day, was like a bounce here is bearish basically, rather than just coming down into like, you know, here 5,400, 5,500. Right, because he was saying like if you bounce, you're gonna do this instead, type of thing. So, what do you guys think about that? Do you think
the difference between those two? Structurally, yes, I called that like 3 weeks ago, and that's what I was eyeing for an actual, like kind of from a fractal standpoint. But you also have to understand the contextual background and backdrop, what was occurring at the time versus what's occurring now. That peak that we had at like right at like 48, 4,900 was when we really started to have inflation scares and the market started to come to the realization that inflation is bad and it might be more rampant than what we first thought was, you know, potentially possible. Where now you're seeing a repricing in the ES due to potential reduction in growth of the economy and overall GDP. Now, if we realize a slowdown in the economy and we realize a slowdown in growth, then sure, you might have a 2022, you know, scenario where we pull back a lot deeper and a lot further than people are willing to, or what people are expecting. But at the same time, the last time that I think is the Atlanta Fed model forecasted negative GDP growth, marked the literal Pico Schmico fucking bottom. Excuse my language. And so it's kind of curious, okay, how do we now view like potential growth? Because at the same time, Trump is trying to obviously curb inflation, bring more of a deflationary, environment to fix the structural inflation. And if he can thread the needle and do it right while keeping GDP and growth high, I think that this pullback is mispriced in the stance that bears are too far ahead of their skis and you get a quick snapback to the upside, and all those hedges and all those puts that have been put on are going to get blown out. So it's just kind of like, okay, do we realize an actual slowdown in growth or do we not? That's what it falls down to.
Yeah. Max, Louis, what do you think about this?
What are we looking at here?
Just the top comparison on the S&P. Somebody, Average Dad, pointed it out.
Yeah. So if we are, if things are going to continue to fall and the supports and these big levels don't hold up, yeah, this could be a scenario we're looking at, but we haven't lost those levels yet. So we'll see, right? Because the thing is, which is, it's kind of always the same way, right? It's like people, they put these charts up, they draw these massive moves down to the downside and a giant like V recovery to the upside. Like if we do go lower, right? And of course we can go lower, right? But what I'm saying is if we were, let's say ETH or whatever, dip into 1700 area, it needs to be a quick reaction, right? It needs to be like a single day, 2 or 3 day reversal where it comes into that level and gets immediately bought up. Because if it doesn't, you're re-entering your bear market territory. You're basically all of the work that ETH put in during the bear market, putting in a base, trading on top of it for 2 years. That's all gone, right? And now you're re-entering that area of price, right? And the cycle is in fact over, right? So if that happens and it doesn't recover, yeah, we're entering a cyclical bear market across the board, right? But a lot of things are at key levels, right? And I'm not one who's going to get bearish at demand. Never have been, never will be, right? I need to get better at getting a little more bared up at, supply and range highs, right? But I'm always good at not getting bearish at range lows, right? So until those levels are significantly lost, right? That's not my scenario. I think this is a mid-cycle correction across the board. Equities, majors, Bitcoin, right? This is a textbook mid-cycle correction for Bitcoin, 30% pullback, 25, something like that. And we see Bitcoin continue higher after moves like this, right? So it's in my opinion that we're in a mid-cycle correction. Obviously, alts are going to take the hardest hit. But again, I think people underestimate as well how hard alts can bounce back, just like Prometheus was saying. Like alts and these higher risk assets can erase months of downtrend in like a couple of days, right? And I think the last month or two, or even a couple months, right, has really put people in the mindset that they don't remember what altcoins can really do. Not saying that's a reason to be bullish, right? I have many other reasons why. DXY, macro pivot point here. We've seen this as a key, risk on indicators, DXY rolling over. These things take time to play out, right? So we're not, we're not seeing the total effect of it just yet. But every time we've seen the Dixie roll over to this extent, we've seen high risk beta assets go on absolute rippers, right? It's the same thing that happened in 2016. Right? 2016, 2017 crypto bull cycle that most people think about, right? Other than last cycle. And the funny thing is Donald Trump was in presidency, the same kind of playbook playing out. So it's either we're in that or we're seeing that right now and things are just taking a little more time. We do get that, that one last flush. I think 1500 is a little too low, right? I'm looking at 1700, right? The lowest I could see ETH go and needs to recover quickly. If it doesn't, it's not looking good, right? It's not looking good. Same thing for the S&P. I mean, sure, we could bounce and roll over, right? But again, you start pushing 20, 25% pullback on S&P, you're entering a multi-cyclical bear market cycle. We're entering into another bear cycle.
Louis, let me ask you something important, man. This is something that we haven't discussed at all. And I'm really growing concerned. This is way more important than anything that we're talking about. This is a number one indicator anytime we go live on this show. We need to see how the likes are doing because the comment section is going absolutely crazy. This must be a bull market. This must be a bull market with the engagement and activity that we're having in the comment section. Guys, how are those likes doing? Max, how are
They're
they?
not good. They're not good, Wobby. They're really bad, actually.
It's been horrible.
They're bad.
I actually don't even want to say the number, Wobby.
It's been, we're in bear market territory for likes and views. But
Tucker,
again, that's a good signal in my opinion. It's never, things are never good, you know, as far as viewing and engagement when you know markets are down, right? And they always come back when things are good.
Tucker, pull up lean hog futures overlaid with the 10-year.
No, I can't do it.
If the likes don't go up, man, guys, we're gonna have to pull up soybeans overlaid with lean hog futures. Oh man,
can't do it.
Not
on a Friday, Wobby. Not on a Friday, bro.
Okay.
They deserve it though. That's the thing, Wobby. You are right, but well, we'll let them off the hook today.
But I mean, guys, do you think ETH goes to 3 digits? If the S&P, okay.
Wobby.
Oh, God.
Look,
Wobby, get a hold of yourself.
Look,
Jesus Christ.
If the S&P, right? If the S&P goes to like 5,100, 5,200, so help me God. What do you think of ETH going to like $900 or $1,000, right? Like,
wait. You think if the S&P drops what a few percent, like 5%?
Japan carry trade lows?
Yeah, I genuinely think ETH can touch like 1,200, 1,300 if we see that happen.
So you're basically looking for a retest of the 2018 all-time high for ETH, Wobby?
Yeah, because I also think that if Sol gets below $100, I genuinely think if Sol gets below $100 and falls below, if Sol loses those summer lows, I genuinely think it's going to have a broader effect on altcoins. And, you know, I understand the hatred for people that have, you know, bullishness on Sol or whatever, because as a matter, like, to be honest, if you're on Sol, you aggressively have to rotate every couple of weeks. It is what it is. That's the cycle that we're in.
Bro, so you're saying S&P goes down 10%, ETH goes down 50?
I generally think so.
Oh, man.
Okay, so this has kind of been my, you know, I've been.
I think so.
Not people, but
no.
The general rhetoric that imagine what happens if the S&P drops to X, Y, and Z level. The S&P has dropped since in the past 25, 30 days, 8%. Okay. In that same period of time, ETH is at the exact same price.
Yeah, no. Because ETH dropped like 30% in like a day, right? Like that's why.
Well, so
before the S&P top.
Hang on. Hang on. Here's the fallacy with that thought process. I think it 1 degree it's logical, right? Because there's obviously a really tight correlation between like what tech stocks do and what something like ETH does, right? Like super obvious. But I also think it's a little bit flawed to assume that if the S&P pulled back another 5%, 7%, give or take, that ETH would drop 50%, because we also know that ETH and crypto, Bitcoin included in that, mainly Bitcoin, will basically price in like a 60-day correction on equities in 24 hours. Yeah. We saw the same thing in Q4 of 2023 when Bitcoin dropped from 29K to 25K on some derivatives exchanges like 22.5, 23. But Bitcoin rugged like what, 22%, 23% in 48 hours. Yeah. And at that same time, equities still had like 60 days of a correction in front of it. Bitcoin and crypto is the fastest horse in every single race. So I understand logically, like if people want to say towards the top of a move, hey, equities look kind of weak or distributive here, I think that crypto is going to pull a drop. Totally makes sense. What to me doesn't make as much sense, it's not impossible, but that doesn't make as much sense, is to pile in after crypto has that drop and say, oh, if equities keep dropping, then crypto is going to drop even more. It's possible, right? But what we do know is a lot more times than not, crypto will puke literally a 60-day correction in equities in 48 hours, and then we'll bottom first. crypto tops first, crypto bottoms first. But those are just my thoughts on it, right?
I've used the 2023 pullback on the S&P with Bitcoin underlaid as an example of this as well, where Bitcoin kind of front ran the S&P's, top. Then S&P dropped like 5-6%. And then you saw Bitcoin follow suit with that initial drop, 20% drop, right? That makes sense, right? But then the S&P bounced and then rolled over for another 8% deeper. But Bitcoin had already bottomed. And in that same time period where the S&P was going down 8%, which is a giant move down for the S&P, Bitcoin chatted 50% back to the upside. So you can't have a move being front ran without thinking that the bottom's also going to get front ran, right? So if the drop is front ran, we have to assume at least, at a minimum, that the bottom is going to be front ran as well. And there are many points in time where it has been, and in fact, traded opposite correlated to the drop. So that's kind of my argument here to that, which is we've seen the drop, it front ran. S&P has dropped 6-7% in the last 30 days. And in that same 30 days, ETH is sitting at almost the exact same price.
Here, I got some alpha. I'm going to get this like button up. I'm sharing my screen right now. I don't know if,
hold on. Because
let's go.
Sometimes it won't.
All right. I can see.
I know.
I can see it.
It's not.
Prometheus, where's the long end? You need to overlay that with the long end.
Hold on. It's still black on YouTube, Prometheus.
Okay.
When we switch it, StreamYard is not liking it. So
okay.
Give it a second. They can't see it.
Guys, I just want to make one thing clear. I think if we have a breakdown on the S&P below 5,100, I think we see below the Q3 2023 levels on ETH. I just want to make that clear. I don't think ETH is going to magically go to like $800, $900 for no reason. All right. I don't want anything to be taken out of context. I'm just dubiously speculating. And I genuinely think whatever low that we get over the next few weeks is something to play a bounce off of. But
hey, guys, I just want to say I've seen some comments like, guys, what?
We're getting no screen again.
A mix of opinions is a beautiful thing, right? We've got a kind of a split and divided team right now. Some bulls, some bears. Wabi's bearish. We got some other guys that are leaning more bullish, right? You should be welcoming of a basket of opinions, right? Like, you don't want to just tune into people that are going to make you feel good, right? And maybe some of you do that, and it's kind of like therapy for you, and like, I guess that works. The best thing you can do is surround yourself with opinions that do make you somewhat uncomfortable. So whether Wabi's right or not, it doesn't really matter. He's sharing his current opinion with you. And by the way, markets could do something, and Wabi could come on here Monday and be like, hey, actually, I've had a change of opinion because of X, Y, and Z, right? Some of you in the comments that are like, I was looking forward to today's show, and then it was so bearish. It's like, it's market check. We're talking about the market. We got 5 guys up here that all have slightly differing opinions. There's some more overlap than others with certain guys. But like, you shouldn't be shying away just because someone has a very contrasting opinion to yours, right? Yeah. I mean, if that's what you're doing, you're not going to win in markets, right? It's as simple as that. Surround yourself with differing opinions. As long as that individual can back it up with something that has some substance, right? If they're just like making a bunch of noise just to make noise, that's different. But Wabi's up here backing it up with examples and some data, right? And a well thought out thesis. If he's wrong, who gives a fuck? If he's right, who gives a fuck? He's sharing his opinion, right? Surround yourself with opinions that make you somewhat uncomfortable. All right.
Yeah.
But anyways, Prometheus, you got something on the screen.
We can't see the screen right
they
now.
can't see it on YouTube, so you guys are gonna have to get a Because Bitcoin premium Discord membership and join the afternoon call later today to actually see it. So
hey, let's try. Let me try to change the layout a second.
Hang on,
dude. As soon as
there you go. There you go.
Oh.
And by the way, guys, if I'm not here for whatever reason, just like toggle the custom layouts at the bottom right here, if you can do that.
Mm-hmm.
Okay.
There's some new update that happened with this StreamYard, and it's just not whatever. Anyways, Prometheus, you're on the screen. Go for it.
All right. We're gonna cook for you guys. We're gonna get this like button up. Everybody, strap in because we are going to cook you up some alpha today. And what better than to talk about the money supply? I mean, dude, it's all over the timeline. Everybody's talking about it. Money's, we are lagging the money, global M2 by 3 months. And, end of March, beginning of April, we're going to blast off, yada, yada, yada. You've heard it probably 1,000 times. Well, we are going to build some context and we are going to get some insight into actually what's occurring with the M2 money supply, because it's very apparent that people take one metric and then they're like, oh, global M2 is going up. We lag it, overlay it on Bitcoin. Boom, we're going to go up, like number go up, right? In that fashion. Well, let's actually dive in and understand what's going on in the back end with the M2. So on this chart that I have laid out for you guys here, I've taken global M2 and then I've created indicators for US, China, Japan, and then I've aggregated Europe together into one line chart as well. And so what we can see here is some fascinating stuff. And I would argue that the United States M2 is more important than even global M2 itself. And the thing to understand is with global M2 portion, that piece that makes that up is also China, all of Europe, Japan, and the rest of the world inherently. And so the driver in the market, I would arguably say, is the United States money supply, right? So what we've seen is, a rise in global M2, but what has actually caused that to occur recently? It's been an increase in the Chinese money supply, European money supply, and Japanese money supply. The United States M2 has actually remained largely flat since December. And if we go back and we look, the Chinese, the Eurozone, and the Japanese M2 money supply are not the drivers of the market. And if you look, right, when Bitcoin went sideways back in July, you actually, and before we bottomed out, you actually had an expansion, a large expansion of the Chinese, Europe, and Japanese money supply, with Bitcoin still largely selling off, even though, yes, the United States money supply was actually rising. Now, what happens when the driver of the markets stops printing money and the market gets a detox from the US dollar not being printed? That's what I actually want to see, what I'm curious to see what actually occurs and what happens over the next 3 to 4 months, because China's not the driver of the markets. Europe's not the driver of the markets. Japan's not the driver of the markets. From what we've clearly seen, you've had China, Europe, and Japan largely stimulate since the beginning of December, when the United States has largely stopped printing money and the markets have actually pulled back significantly. Where if you look back at 33K to 40, I think it's like 33K, to 42K region, the US money supply was largely going sideways. Yes, what happened was we did get a big pop because the ETF announcement, but at the same time, you can see that the Japan money supply decreased, right? European money supply went sideways. The rest of the money supplies, and this is what I'm trying to build context for you guys, don't actually drive the markets. What is the driving factor in the markets? It's the United States money supply. And the United States money supply is going sideways right now. People in Hungary, people in China, people in Japan, they're not bidding these markets. It's the United States citizens, the people that are DCAing into their 401ks. It's the retail participants in crypto that get their checks, from their 9 to 5s, that are the ones that are actually bidding these markets. And so just because global M2 is rising does not, I don't think, and from what we're seeing, is that BTC is inherently going to follow if the United States money supply is not also increasing at the same time. That is the most important factor of global M2, is the United States money supply. You could have China printing. You could have all of Europe printing. You could have Japan going bananas back between July and September. and the markets don't move. What moves the markets is the United States money supply. And more importantly, what I'll even go out on a limb to say, and what I'm still back testing, is what if Bitcoin is actually front running the US money supply and USM2? That's what could be fascinating. If Bitcoin and crypto, what people have talked about has been a lagging indicator and it's far out, on the risk curve and beta. What if it is actually front running our money supply and our printer? And what if that is built into the back end in Bitcoin? And what if crypto markets are actually much smarter than most people actually think? That's the most fascinating thing to me. So just because global M2 is rising does not mean your bags and your number go up. Sure, it looks decent from a charting perspective since, about the ETF announcement. We front run it a little bit, but at the same time, right, it's also important to understand the other makeup of the M2 at the same time, with China, all of Europe, all of Japan, which do make up a significant portion of the global M2, but are not the driving factors of price action. It's United States M2 and money supply. And the United States dollar, as we know, is a global reserve currency. So it's more important to not look at global M2. It's more important to actually look at US money supply. Because when all the countries are essentially, backed, they're backing everything with the United States dollars, then the yen, the euro, the yuan, they don't matter as much, even close to a fraction as what people may think. And so when you have China going on a massive printing spree, that does not mean inherently that that flows into the markets, right, and is stimulative in any way. I think it's important to keep your eye on the United States money supply. And global M2, I think, yes, it's had decent correlation, and Bitcoin's quote unquote been a lagger of it over the, for about the past 16 months. It's not as much alpha, in my opinion, as some may put weight on. Because like I said, what happened when United States money supply was largely going sideways, and if we not had the ETF announcement, I would have begged to say that Bitcoin would have gone sideways, and at the same time, China was printing, Japan was actually selling off, and Euro was going sideways. So this is some actual alpha in regards to the money supply and what's been going on behind the scenes with it, and to give you guys more perspective on the global money supply, not just overlaying the chart being like, oh, it has decent correlation, okay, number go up, number go down, number go sideways, yada yada, whatever. No, we need to look into the back end. What's the drivers? What actually pushes these markets and what doesn't? Just because Euro has been absolutely dumping money, or absolutely printing, China's been absolutely printing, Japan's been absolutely printing, does not mean that's inherently bullish. And if those are increasing global money supply, but the United States money supply is going sideways, and the United States money supply is the driver, do we really think that the markets follow global M2? Or do we think they follow United States M2?
Prometheus,
I was going to say, yeah, I mean, it's clearly more risk assets, at least US-based risk assets, and crypto, which again is global, not domestic here in the US. They seem much more dependent and reflexive towards domestic US liquidity conditions rather than foreign. I think you got to obviously look at the whole basket, but it certainly seems like US monetary policy is going to it's the predominant driver of a bull market, right? So, I mean, I would totally agree with you. And I mean, even looking at like some of these other smaller nations are not doing QT. They're either like, I mean, transitioning from QT to QE, but like their economies and their Fed policy, their central bank policies are leading what's going on here in the US by like up to 6 months, but it doesn't really matter until you get the US on board with it. So, I mean,
And not only that, a big reason why arguably Europe, Japan, and China is stimulating is because the economic pressure that Trump is bringing to the table that he's putting on these other countries with the tariffs, with a lot of his, policies. And because of that, they understand that the pressures that are potentially coming down the pipeline. And so they want to get ahead of it. They want to start printing. And the reason why is because they want to start stimulating their own economies, right? To keep demand high, right? So that they don't bleed against the dollar inherently. And so I would say that the global M2 rise that we're seeing right now has less of an impact, in my opinion, on price than some may actually assume.
Wabi, were you going to say something? I feel like we were fighting to say something. I didn't mean to cut you off before.
I was just going to say, like, I think US M2 starts to go up just like all the other zones once QT ends. That is surely the next big macro event. Kind of like how when the Fed was about to cut, right? That was the next big event to drive markets to go into that parabola that we experienced in Q4, right? Or even the pause, if you guys remember, back in August of 2023, after we had that nuke, right? We were all speculating that, like, as long as rates remain the same, it's kind of like a de facto pause. And then in Q4, right, after a couple of FOMC meetings in December, we're like, all right, Fed has officially paused. They didn't outright say it, but, the markets kind of took that in with Powell not increasing more rates as the official pause. So, like, the Fed is probably going to end QT at some point, but they're not going to outright say it, right? You're just going to see that in the books. And I think that's when US M2 starts to do its thing, right? And if you guys remember, when I started bringing on Jackus onto our spaces during the summer of 2023, he was noting that if you look at what other central banks were doing at the time, they had their rates pause, or they were cutting rates already. And what happened the next year? The Fed stopped increasing rates and we started cutting, right? So it's kind of like looking at what other central banks are doing and using that as alpha for what we're doing right now. So it's all one big giant trade, right? But with US M2 being flat, you could expect growth to kind of suffer for a bit. And the good thing is that it's really only short-term pain for long-term gain, right? And essentially, right, from what we've seen with price action in general, this 4-year cycle is, for the most part, done for. I think crypto has evolved from that standpoint. And I think when US M2 starts to go up, when QT ends, that's going to be a perfect time to be exposed to growth. And Cathie Wood's going to make a ton of money, man. One more time. So
one more time.
We need her to make money. Like, if you want your alt season, you need to see ARK Invest start to go up only, man. Like what Hoodstock was in 2024, you want to see the same thing for Cathie Wood's ETF for a broader alt season, right? So, yeah, I mean, we saw that happen from April of 2020 all the way to February of 2021, right? That was a great example of what we can see once US M2 starts to trickle up. US M2, right? US M2. Someone says, wait, is Wabi bullish? I am once the Fed ends QT, man. I'll tell you what. And I'm just going to have to start buying some stuff if we hit certain levels.
I think the market too is going through a little bit of a detox period, and it's, I mean, everybody's like, oh my God, like the government's not printing all this money. And, we're just kind of still detoxing, in my opinion, from, years past. Now, I don't think it leads into a recessionary environment at all. I think this is very much a healthy pullback. We were Michael Cantrell on the space was talked about how we were projecting like, almost perfect, expansion and growth across equity markets. And it's a healthy pullback, right? And he's obviously doing what needs to be, like, what's occurring is what needs to be done for the long term, from a health perspective of the country, like genuinely, in my opinion. And I'm glad that we're getting it, because I think had we not gotten this, regime shift in policy and in the direction of where we were headed, I think things could have been, almost Great Depression-esque in, around 2030. So fixing it now, getting us, back on the right direction is much, much, much more bullish for the markets long term than most people may think. And we're just going through a little bit of a detox period. And because we're in crypto, we want things quick, fast. Now we have the, gaming mentality, casino mentality, and we want things to be immediate. But in the long term, guys, this is much, much, much more bullish for our bags than most may assume.
Geez, the SPX went below 5,700. We're now 2.5% in the negative year to date. See how the NASDAQ is doing. Oh, below 18,000.
All right, guys. We went a little bit over today, guys. That is going to conclude today's show. Thank you guys so much for tuning in today. Greatly appreciate it. Do us a solid. If you want to support BB as well as support your own trading journey, consider checking out the first link in the description below. That will take you to becausebitcoin.com/premium, where you can browse our products. I will tell you a little bit about the main one. The first thing you will see on there is the BB terminal, guys. This is a custom trading terminal built out by the Because Bitcoin team. It's taken us a long time and a lot of money to build this thing out. It's got hundreds of custom proprietary indicators that will help you navigate this market, whatever you are interested: derivatives trading, on-chain stuff, heat maps, spaghetti charts, portfolio tracking. It's the all-in-one Swiss Army knife tool. And again, it is custom built by us here at BB. Now, if you're looking for a little bit more than that, you could check out one of the Discord packages. To be clear, if you are in our Discord, you get a free BB terminal included in that Discord membership. But what you can expect in the Discord is basically 3.5 hours per day of private live voice calls with me, Wabi, Prometheus, Tucker, Louie, who just dropped, everybody on the entire BB team in at least one of the calls. We do 2 per day, one in the morning, one in the afternoon at the New York Open and the New York Close. And on top of that, we do Q&A. We share positions. We have like private channels you can get alerts for charts and things we don't talk about here on YouTube or on X. So guys, it's a really great product. It's a really great way to really see behind the curtain on what all of us here at BB are doing and how we're navigating these markets. And again, you support us, you support your trading journey, and you get a really awesome tool called the BB Terminal. No better way to track your portfolio and track these markets all in one. But guys, thanks so much for being here. Please leave us a like before you go, and we will see you on Monday for another episode of Market Check. Everybody stay safe and take care.